Hello students, good morning and welcome back to the online class. So we completed the 24 marks problem in the previous class and we'll continue with another 24 marks. So please take down this problem. So copy down this problem. So continuation part. Okay, so let's start with the solution. So before that, we'll discuss the adjustment. Okay, see the first adjustment. So write off bad debts 1200. So this is the new bad debt. We have already solved one problem regarding this type of adjustment, where there is a bad debt, where there is a new provision, and where there is a old provisions, right? So what is this format? We have to take the new bad debt. You have to add the new provisions which is given in the adjustment. See, if anything that is given in the adjustment, that is something new that you need to adjust that from the current concerned balances. Okay, so bad debts, then you have to add this new provision, then you have to deduct this old provision. Okay, sundry expense outstanding, you have to add it to the concerned item, that is sundry expenses, and you have to show it as a liability, outstanding liability. Depreciation, you have to calculate on furniture, then you have to deduct from furniture in the balance sheet. Now catalogs in hand were 600. Okay, so when I solve the problem, I will explain you how to treat the item. So in hand means that is a closing balance. So we have one format that we'll see when we solve it. Okay, then there is a closing stock. So treatment, trading account credit side, and balance sheet asset side. Now there is an inter-transfer departmental transfer which is made at cost price. This is very important. Why it is cost price and what are the changes in the practices if it is sold at its selling price and the cost price. See, cost price means the cost at it is the rate at which you produce the good and you transfer the goods at the same rate. Okay, there is no adding of load price. So when it is sold at the cost price, you are not supposed to calculate stock reserve. If you sell at selling price, means if you add something extra on the cost, for example, you manufactured one goods for 20,000 and you sold it, sorry, transferred at rupees 25,000, means you added something extra, that 5,000 is stock reserve. So we have to adjust from the profit, right? We have to prepare general profit and loss account. We have to adjust the load price from the actual profit to get the, sorry, we have to adjust the reserve from the profit to get the actual net profit. But when you sell, when you transfer at the cost price, means there is no load price. So you are not supposed to calculate the net actual profit. The profit what you get at the end of the profit and loss account, that itself the actual net profit. Okay. And the last one, all the expenses to be allocated at 2 is to 3, 2 is to 1 basis, that is 2 by 3 and 1 by 3. Now all the expenses, and what about the income? There is one income, that is dividend on shares, right? Now how to allocate? When all the expenses are allocated in the ratio of 2 is to 1, then the income also allocated in 2 is to 1 ratio only. ಎಲ್ಲ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಎ ಮತ್ತೆ ಬಿ ಗೆ 2 is to 1 ಅಲ್ಲಿ ಹೋದ್ರೆ ಇನ್ಕಮ್ 2 is to 1 ಅಲ್ಲೇ ಹೋಗ್ಬೇಕು, because they have to bear the loss, right? Each department has to bear the loss, so it should be allocated among two department in 2 is to 1 ratio. Okay, now we draw the lines for departmental trading and profit and loss account. Departmental trading and profit and loss account for the year ending 31st March 2021. Okay, you have to always start with opening stock. So write two opening stock. Okay, next item, purchases. If there is any adjustment, then you have to deduct or adjust that figure, then you have to take it to the total column, then you have to apportion. Then there is sales and there is return inward, that is sales return. So first you have to deduct that return, then you have to enter in the trading and profit and loss account. Okay, you have to deduct that return. Okay, next there is a transfer. You see the transfer, inter-transfer department. That is, we debited B's account. So on the debit side, you have to write 2,500 under B, and we credited A's account. So it is 2,500 on the department A. In the sense, it is transferred from department A to B. Okay, you make one correction here. So here you write, it is correct, transfer from A department. Here you write transfer to, okay, you sorry, make correction here, transfer to. You write transfer to B department. Okay, next, wages and salaries in the ratio of 2:1. So it is wages and salaries. So we took it as a direct expenses. If it is only wages and only salary, then wages will be the direct expense that to be entered in trading account and salary in P&L account. When it is both wages and salary, you can take it as direct expenses. If it is salary and wages, then you can take it as indirect expense. Okay, you see the first item, first word. If it is wages and salary, then you take it in the trading account. If it is salary and wages, then you take it in the P&L account. Okay, next, carriage inward. So carriage inward is a trading item. Carriage outward is the P&L item. Next, closing stock. Closing stock. So if you do that, if you take the difference, either you will get gross profit or gross loss. Here credit side is more, so it is 2 gross profit. Now you do the total and calculate the gross profit. So total 1,02,600, 80,500, 1,83,100, and the gross profit is 39,000, 24,500, and 63,500. So it is two gross profit. Next to write by gross profit. That is by gross profit brought on. So it is 39,000, 24,500, and 63,500. Okay, next you have to take all the indirect items. The first one, that is to advertisement and catalogs. So now you have to follow one format. See, you see the adjustment, there is a closing catalog value, that is catalog in hand, that is a closing one. In your trial balance there is advertisement and catalog, that is current year, means that is purchased. Okay, so the difference is treated as the catalog used. That means first you have to take opening stock. See, when there is a closing stock, there should be an opening stock in the format, right? So you have to take opening stock. But in this problem, the opening stock of catalog is not given. So you take it as a nil. Okay, catalogs. It is nothing but the manual. It is a descriptions. It contains information about all the items. That is what catalogs. So you have opening stock, but it is nil. To opening stock, you have to add purchases. So purchases is given in your trial balance, advertisement and catalogs 8,700, that is the purchase. From this, if you deduct the closing stock, that is 600, the difference what you get, that is the catalogs used in the current year, that is in the year 2020-21. So you add a nil in the as a opening stock, you didn't add anything at the beginning, but in the current year in the current year you purchased 8,700 worth catalogs, and that is for advertisement. Okay, catalogs is given for the advertisement purpose and for the give the information to the person, the outsiders. So you purchased 8,700 worth catalog. So now in hand there is 8,700. But when we close the books, we are left with only 600. Means the remaining 8,100 I have distributed to the outsider. Means I have used that worth catalogs. So now this to be allocated in the on the ratio in the ratio of 2:1. It comes to 5,400 and 2,700. So for catalog there is no depreciation. Okay, so we use the word the catalog used. Catalog used. Okay, next item, that is dividend. So dividend is also shared in the ratio of 2:1. Next, rent and rates in the ratio of 2:1. Sundry expense and outstanding. You have to add outstanding to sundry expense. Then you have to allocate in the ratio of 2:1 among A and B. So next, bad debt. So that is new bad debt. So new bad debt you have to add New provision. How to calculate provision? It is detailedly explained in the previous classes, right? So how to calculate provision? That is on net debtors. You see what is the net debtor? Okay. From that net, sorry, you have to see the debtor value that is given in the trial balance. From that, you have to deduct the bad debt which is given in the adjustment. I repeat, it is given in the adjustment, that is 1200. Then you have to deduct, sorry, after deducting bad debt, you will get the net debtors. On that, you calculate the provision, that is a percentage of provision. It comes to 2400. So next, old provision, that is 750, which is given in the trial balance. So bad debts 1200, provisions, that is new provision. How you got new provision? 49,200 is the debtor value. From that you have to deduct the new bad debt which is given in the adjustment, that is 1200. The net debtors is 48,000. On that 5%, 48,000 on that 5%, you will get 2,400. Then if you deduct old provision, that comes to 2850. Now your portion on the base of 2:1. It 1900 and 950. So next, the last item, that is depreciation. To depreciation on furniture, that is 10% on furniture. The furniture value is 15,000. On that 10%, it comes to 1500. 1500. So the difference will be net profit or net loss. Here your credit side is more. So it is net profit. Now you find the total, calculate the total and find the difference fast. So the total is 39,700, 24,850, 64,550. So the difference is 14,000, 12,000, 26,000. So 26,000 is the total net profit. If you transfer the goods from one department to another department, then you at a selling price, then you have to calculate the reserve that should be deducted or adjusted from the net profit, right, in the general P&L account. But here, as the goods has been transferred at the cost price itself, so that this 26,000 itself the net profit. There is no adjustment required on this 26,000. Okay, so if it is transferred at selling price, then you have to prepare general P&L account, you have to adjust the reserve. But here it is transferred at cost price, so this the figure itself the actual net profit. Okay, after this you draw the lines for balance sheet. Okay, so the first item that is in the trial balance, that is capital 1 lakh. So write the amount in the inner column. So to this capital, you have to add additional capital if any. There is no additional capital, so you have to add net profit. If it is the net loss, then you have to deduct. In this case, in this problem, it is net profit. So add a net profit 26,000. So the total 1,26,000 in the inner column. So next, if there is any drawings, then you have to deduct. So less drawings 20,000. So drawings 20,000. So net figure 1,06,000. Next item, shares in B Limited. So shares in B Limited, you can either record it as investment. Okay, so shares means investment. You can take it as an investment or shares in B Limited. So 23,000. As we are preparing combined balance sheet, so you can take the total amount, that is 23,000. Next item, debtors. So write debtors 49,200 in the inner column, 49,200 in the inner column. So bad debtors 49,200. Then first you have to deduct the bad debts. The adjustment item bad debts 1,200. So write less bad debts 1,200. Then provision, that is new provision which is given in the adjustment, that is 10%. So less new provision 2,400. The net figure, that is 49,600 in the outer column. So next item, after debtors, creditors. Creditors 29,740. So next, furniture. So write the amount in the inner column. There is a depreciation. So furniture 15,000 less depreciation 1,500. The net figure, that is 13,500 in the outer column. Okay, after furniture, bank, that is an asset, bank 6,840. Okay, now you see the adjustment. In there is catalogs in hand. So in hand means that's a closing balance, so there's an asset. Catalogs in hand 600, that is an asset, that is a closing balance. Then you have outstanding sundry expenses 400. Outstanding sundry expenses 400. Then the closing balance, closing stock, closing stock, A department 29,600, B department 70,000, total 46,600. So now you do the total, your balance sheet will tally. Your balance sheet tallies. So the total is 1,36,140, 1,36,140. So today end today's class with this problem. So remaining we'll see in the next class. Okay, thank you.